those proof points and reasons to believe, which I think for Brand SA, it's easy for us then to market our country. And maybe just to spend a minute to introduce Brand South Africa properly, it's that it is a trust, and we are an implementing agency that manages South Africa's competitiveness. And what we also do is we then narrate, we package the narrative of South Africa. And of course, I have the pleasure of engaging with many of our CEOs and many of our ministers as well. So without further ado, I'm actually very fortunate that I've got such an esteemed panel, and that we're the first setting the tone, just to make sure that as we set the scene, we are punchy, we are tangible, and we are going to talk about the very same results that the President is obviously looking to us to be able to touch on that. And I think I'd like to just at least give each one of you to introduce yourselves. It would be good for our panel at least to get to know a bit more about the portfolios that we manage. If I can start with you, Minister of Finance, Ntate Godongwane. I think we already know that you're the Minister of Finance. Maybe we can just touch on the reforms, the structural reforms that the President has touched on, and Minister Dau. We are going to have to move a needle. Accelerating pace is going to be quite important, which means that we are going to have to, of course, move as quickly as possible. And where do we start, Minister? Because, of course, we are pleased with the progress that comes from Operation Vulindlela. So where to from here? How do we accelerate pace? What are our low-hanging fruits? And what would it take for us to get there? It's on.
Yes. No, let me start by doing this. I'll be failing in my duty as Minister of Finance if I don't start with the macroeconomic foundations for such structural reforms. The first thing I want to turn is that underpinning these structural reforms is a sound macroeconomic environment. As you might have said, as the President was speaking, a couple of things we're talking about is that from a macroeconomic perspective, a sound inflation is going down. To the extent that there's a disruption as a result of the war, market consensus in South Africa says we may go up 1.3, 1.2, 1.3%, which is 4.3, which is within the tolerance band. In that sense, we're fine. A sound fiscal framework, which is also fine. These are the underpinnings. In the absence of that economic environment, even the structural reforms would not succeed. Coming to the structural reforms which complements that macroeconomic environment. Structural reforms are intended to facilitate this economy to growth, to unlock it to some extent in an environment where some of our state-owned enterprises were kind of a monopoly in their sector. If you've got a challenge with that monopoly, then you've got a challenge in the entire sector. So you could have seen, for instance, when we had a challenge with Eskom, we had a challenge of 16 years of load shedding, and we're trying to fix Eskom not to fix power to the grid. And we've realized that what is critical is to fix power to the grid by having as many generators as possible, and so that in this there's a competitive generation market. That is in place. Similar arrangement, for instance, with the logistics, a similar problem caught us. When Transnet can perform, and then the entire sectors, like for instance mining, had faced challenges. It has got implications for my revenue as well. If mining is not able to ship a product to the port, my revenue suffers. So all of that, we're trying to make sure that there's a competitive rail system, there's a competitive generation. We want to move that with speed. You must have heard Minister Chrissy outlining what is happening in the rail sector, and Minister Ramkhopa outlining what's happening in the energy sector. The President made reference to also visa environment. So we want to move with speed. The Bureau for Economic Research has said, if we could to move with speed, the fact that the economy is growing at about 1.6 now and 1.8 and 2 over the next 3 years, we could achieve higher growth levels than that at about 3.5 growth levels. So it's in our interest that to fast track all of these things that were announced by my colleagues before I took the platform. Thank you.
Thank you so much, Minister. I'd like to build on that, Minister, because there's also a suggestion. I think also just to say to you and to the ladies and gentlemen in the room that National Treasury, just to quote Sim Shabalala saying that National Treasury, it is our national treasure. And we commend you for the excellence in which you conduct yourself. And of course, we also understand that you are recognized as the worldwide, you're recognized worldwide for your excellence. And I think what's important as well to note is consistently being ranked amongst the top 3 fiscal authorities. So congratulations, and we are super proud of the work that you do, Minister. I think my follow-up question then is also to look at, thank you. And that is the excellence that we want. To follow up on that, Minister, I just wanted to understand, do you see the need for us to also talk about the reform of the business regulation? I like what Minister Ramokgopa said, that we're cutting the red tape and we're rolling out the red carpet. So can you talk about that a little bit? Because of course, the structural reforms that we've been alluding to, I think you've already touched on that, but on the business regulation, how important is that? Because I think it's important also for our investors to understand what is it that we're doing to deal with that aspect.
A lot of work is being done to remove red tape. I mean, let's just use an example of small business. I don't know whether my colleague is here. If you require small business, for instance, now we've done a good thing for them on registration for VAT. We've done said any small businesses below 2.3 cannot register for VAT. But another point is the registration. You don't have to give somebody, a small business, to fill a document as if they're writing exams when they want to register. All we want to do is make sure that we know that they exist, then bring a whole rate of a regulatory environment for them to register. It applies, we're looking at also at municipality level. Part of what we're doing is to reform the capacity of the state. And most of these companies, where they invest, they go into specific municipalities. If those municipalities have got a regulatory framework which make it difficult for them to work, that environment has got to be changed and make to South Africa an environment where it's easy to do business. So we'll look at the entire regulatory framework to change it.
Fantastic. Thank you. A round of applause, ladies and gentlemen. Thank you. Minister McPherson, as I said, very interesting journey. I remember our trip when we embarked on an investment roadshow to the UK. And of course, I was meeting you for the first time, got there, and my gosh, we started, of course, engaging with the financial institutions, and wow, little did I know, Minister McPherson then pulls out an investment book. And I thought, an investment book, okay, clear definition of the projects, where the projects are, and then the total value of those projects, and also being specific about what is it that we need per project. So I never forget, that was an interesting first impression. So Minister, thank you very much for the work that you're doing. Obviously, thankfully, the Presidency and the Treasury, they've now both turned their attention on improving the performance of our municipalities. And also, most importantly, you have an important job, of course, in restoring and expanding the large-scale infrastructure networks on which our economy obviously depend on. If you could just take us through some of the examples of how you have been embarking on the structural reforms. Of course, I've done a lot of my research where I look at what you're doing with Pilanesberg, with the municipalities, and also the state national property entity that the president announced when he actually delivered his SONA speech. So please take us through the very same tangibles, because today we're obviously, or our panel is focusing on those very tangibles. Thanks, Minister.
Thank you very much. It's nice to be here, and good afternoon to Minister Godongwana and colleagues here. So, I mean, I think that our role really, particularly through Infrastructure SA, has been to support government's efforts in getting infrastructure projects to the market, to be invested in. And we know that our research shows that 80% of infrastructure projects fail to get investment because they aren't adequately prepared and ready for investment. So we spend a lot of time through ESA particularly focusing on that, as well as ensuring that those projects that are in our infrastructure book or are in our SIP pipeline have the support to be able to get to close. So, we spend a lot of time, particularly around unblocking requests and helping projects navigate some of the red tape that Minister Godongwana was talking about. And if you look at the 693 requests that we've received, so far we've been able to respond supportively to 77% of them. So, those that have stalled or those that aren't going in the direction that they should, ESA has been able to come in as a trusted partner and be able to unblock them and get those to the finish line. And I think that is incredibly commendable to have an entity that is able to work with both government and the private sector to be able to achieve those collective goals. We're also currently doing a trial project at the moment with 4 local municipalities, because I think we understand that the real crisis of infrastructure maintenance or development exists in local government. Minister Godongwana will tell you that 100 billion rand is returned in municipal infrastructure grants one way or another, and that's missed opportunity in local government. And so what we've sought to do is not say that we want to overtake what local government does, but we want to partner with them. So we actually ask the mayors and the municipal managers to actually sign semi-formal contracts with us that allows us to partner with them and give them the technical capacity. And just in those 4 local municipalities that have small budgets, we're looking at about 8 billion rand worth of infrastructure projects in those municipalities. Now, that is a game changer for those sorts of municipalities, particularly around waste to energy, electricity reticulation, roads, and so on. So, I think that we are doing our bit to try and support government's effort, but also to do so in a niche way. We can't be everything to everyone. You made a good example of the Pilanesberg airport, and that was an interesting case because we were approached firstly by Sun International, who own Sun City, and they were saying that they were losing a lot of clients that couldn't fly in. And so we approached the provincial government, and we had a really good conversation with the Premier, and the Premier said, we've tried 3 times to try and unlock this project. We just don't have the skills or capacity to do so. We're going to ask ESA to partner with us. And so now we've actually been able to relaunch that, and we will work to see a triple P take place there. So hugely exciting when you put the technical capability that we have matched with private sector ambition. On the property side, or that's the public works side, we have long conceptualized that government is by far the largest owner of fixed property assets in this country. The differences compared to us and GrowthPoint is GrowthPoint declare a dividend every year. We don't. We don't earn a single cent out of those assets. And so we have wanted to refocus ourselves not to be the maintainer of bad buildings, but to become an asset manager of the state's assets that drive investment into them through a specifically designed investment vehicle that works on commercial principles and that can actually drive in private sector investment through actual property structured funds. And I'm really glad that when we were in London a couple of weeks ago and we had these discussions with the JSE and other institutions there, they said you're on the right track. We just need to get some expertise behind this. And my personal view is that when we get this right, I think that South Africa is going to have an anchor of incredible assets that actually derive wealth for the country.
Good.
And you can then use that for a sovereign wealth fund, which government has spoken about for the longest time. So we're hugely excited about that. I know that Minister Godongwana is hugely excited about the prospects of a department like us creating revenue for the state that then can cross-subsidize social infrastructure, which normally doesn't always have a great investment case on.
Fantastic.
So I think that we're on the right track, a lot of hard work.
Great.
But that partnership, and that's our key message, is partnerships is what unlocks opportunity.
Fantastic, Minister. Partnership and collaboration. Thank you so much, Minister. Great work. A round of applause, ladies and gentlemen. You'll have to excuse me, as the chairperson of Brand South Africa, SA Inc. is very, very strong. They make it so easy for us to be able to market this amazing and very dynamic brand. Coming to you, Valdine, ladies and gentlemen, again, I'll have to announce that this is our incoming CEO of the Johannesburg Stock Exchange, starting her job tomorrow. First time that JSE would have a woman of color at the helm of it, highly competent, and has been very, very strong in managing our capital markets. Well done, congratulations, and we are looking forward to you doing great work. Val, super proud of you. Now, maybe Val, if you can just take me through, I've got two questions for you. The first one is reform translating into opportunity. Now, from a JSE's perspective, we've obviously seen this meaningful progress that I've alluded to and the ministers have alluded to. Where are you now, and what are you seeing in terms of the translation of this into tangible and investable opportunities in the market? That's one. The second one is also looking at the market credibility and global positioning. Right. So from a capital markets perspective, how do you see South Africa's capital markets strengthening the country's global competitiveness and attractiveness for investment today?
Thanks, and good afternoon all. Good afternoon, fellow panelists, Minister Godongwana, Minister McPherson, and to the audience. And thank you for the congratulations. Certainly a role I take with great responsibility and proud to lead for a country and for the organization. So yes, South Africa stands at one of the strongest investment principles or thesis that we've ever seen in the history. And the reason that we say it with such conviction, it is probably the most credible time we've seen the country-level national objective alignment with that of the market performance. So since the establishment of the Government of National Unity and over the past 24 months, the South African capital markets have stood strong on a global stage. One, we've seen a high conviction of building investor confidence, not only from our local investment back into the country, but also now a higher conviction from the foreign investment that had actually exited our country over the decade before. And against a backdrop of meaningful structural reforms that we've indicated that we can now start showing tangible execution delivery with a positive trajectory and plan with accountability in the near term. So what we've seen over the last 24 months has been a massive shift of investment into South Africa. So where we had foreign investment outflows for the decade prior, and South Africa had lost its relevance on a global stage in global indices from a peak of about 10% all the way down to 3%, we've seen that trajectory massively shift, where South Africa stands now just under 4.5% in global emerging market indices. But more than just a South Africa play, a very highly credible opportunity from an emerging markets perspective. And it's not so much just about the conviction of our momentum, but the delivery of the results in the market. What we've seen is South Africa delivered just under 60% dollar return in our equities market last year, which was one of the strongest returns on an absolute basis globally. And even through the hyper volatility of this year, we stand among top 3 markets in the world on both a developed and an emerging market perspective. And I look to the fellow panelists on this group today. Some are listed companies with Puti at Naspers. One of the beauty of the markets of South Africa is that we have such a diversified market. Yes, we've seen the tailwinds of commodity cycle underpin the performance, but many other sectors which were deeply discounted in the past now starting to attract real investment from foreign investors and local investors into South Africa. So it's a really compelling story because it's not just a shift in one investor profile, but it's a broad-based belief that actually South Africa is in the early stages of a structural reform, and that gives the momentum to what you can display through our equities and our debt markets, which have very strong credibility on returns and a yield perspective globally. So you asked the point about, South Africa rebuilding its stance as a region, as an emerging market, but absolutely, I think the position we have right now is one of a much more global nature. It is no longer just, is South Africa in vogue or not? How do we fare relative to our BRICS nations or our other emerging markets nations? our other African counterparts, but what does the ecosystem at a country and a public markets perspective give the country and investors confidence to say they can invest in a very high caliber, strong balance sheet environment, both from the fiscus, the strength of the corporates, as well as a deep institutional bedrock that underpins the investment thesis for South Africa. So I think the positioning of South Africa is one of not saying South Africa is relevant again, but that South Africa is globally competitive, open for business, and has the outlets and mechanisms, whether it's fixed direct investment into the structural reforms or through the liquid and fast-growing markets of equities, debt, or other investment opportunities in South Africa, that we have the investment profile to attract and embed investor confidence. What that will see is a higher positioning, not just from our local investors, but foreign investors into our market. And once you get more investors into your market, that gives you a long-term trajectory for growth.
Fantastic.
So it's really looking opportunistic. And
Excellent.
I don't think that we should look at South Africa as a recovery, but really how we have muscled up in the global competitiveness
Yes.
as a region, as a jurisdiction, and with a very strong and credible economy and market with positive momentum to build.
Excellent. Thank you very much, Val. A round of applause, ladies and gentlemen. And may I say, as someone that also serves on one of our telcos, which is JSE listed, by the way, so I'm also subjected to the very same compliance, that makes our institutions very, very strong. And to say to the investors, you can definitely trust that your investments and the compliance from a governance perspective, it does work. And the rule of law also does work. And also having served on the Siemens Energy Board listed in Frankfurt. So it has been a pleasure, Val, to work directly, of course, with the JSE and then being subjected to your compliance. So thanks. I'm going to, again, just indulge one of our esteemed leaders, Puti Mahanyele Dabengwa. Puti, I was listening to one of our economists, I think day before yesterday on TV, and he was saying that whilst we are obviously here and we are looking forward to working with our international investors, do we have proof points or reasons to believe around South African companies that are investing in South Africa? Because one of the key things that could be a deterrent is for us to sit here and sell our country and say it works, but then we don't showcase what our local companies are doing. And of course, NASPAS is one of those great case studies and stories that we're very proud of. If you can take us through as NASPAS, and also maybe just take us through what is it that you're doing in the country, your commitment thereof, for us then to have the confidence and proof points to tell our international investors, and of course other Pan-African investors, that we are actually open for business. Thanks, Puti.
Thank you very much for the question, Ipileng. So, here, what I'm really proud of is the fact that we're very much a proudly South African company. And from that perspective, we've got the PRC as our largest investor. And so globally, as you mentioned, we're a global company operating in 80 markets. We've invested $8 billion, just in FY27, so that's 140 million rand. And when you look at the lens with respect to South Africa itself, here in South Africa, we've got our Take A Lot e-commerce platform. We've got Mr. D, and I'm sure you all are consumers there. We've got Property 24. We've got Auto Trader, and it's really important for us to look at growing these platforms. I mean, Auto Trader has got 46 million users, all in South Africa. And you've got Property 24, which also has, on a quarterly basis, Property 24 has 7 million users. And what powers our business is small and medium-sized enterprises. Oh. So when you look at Take A Lot as an example, they've got 30,000 plus SMEs. And so the focus is on ensuring that these small and medium-sized enterprises are able to scale. And so we've got businesses that have already, gained significance. There's businesses who joined us only just during COVID, where you had people who just thought, let me take a chance and start a business online. And now they've grown into significant businesses where those people have left their jobs and actually focused on their businesses. But the important thing for us is that we've continued to invest into this. And so Take A Lot has been focused firstly on the townships, ensuring that we can get as many of these SMEs, many of our sellers, many of our people coming from the townships. And so there's been a significant focus on that, and also ensuring that we can get as many people as possible employed onto our platform. So Take a Lot put a process of ensuring that they can get over 20,000 people employed onto the platforms just from the townships. Then in addition to that, we've got our fulfillment centers. So Take a Lot has ensured that we are democratizing access to logistics. Often what you find is that small and medium-sized enterprises don't have access to the best logistics to be able to ensure that their businesses are able to really scale as fast as possible. And so it's been really good to be able to see that, through the Take a Lot fulfillment centers, we're seeing entrepreneurs being able to really scale their businesses prominently across the nation. And in addition to that, I mean, there's been a number of things that we've done to be able to ensure that we are supporting our sellers and ensuring that we are supporting our SMMEs on our platform. And this is something that's really, really incredibly important for us because of the fact that our business is built on the back of these SMEs.
Fantastic.
And so from that perspective, this is something that will continue to be invested in. And we work alongside other tech players as well, such as Google and others who provide us with the support that we require for us to be able to ensure that our businesses are getting access to the best AI skills as possible. And so from that perspective, we've produced an entity called Token, and we started testing it just with our own employees, where we've got, employees who work in HR, in finance, different parts of the business, being able to come up with AI agents. Because what we are putting forward is the fact that AI is not only for people who have studied AI only, but it is for everyone. And all of us can be able to use it to make our lives and our businesses more efficient. And so we are now rolling this out to our SMEs as well, to be able to ensure that they are able to run their businesses more efficiently with the use of AI. So,
Fantastic.
Our business is really fundamentally focused on AI, and that is something that's important for us to be able to grow revenue, to deal with cost issues, and all sorts of things that we face as business.
Excellent, Puti, just to build on that, so the ticket sizes that we're talking about, what are they, if we're to quantify some of those investments that you are alluding to?
The ticket?
The ticket sizes. So how big are these investments? So the significance of it, so the magnitude of it. If we're to quantify, how much, what are we talking about when you talk about numbers?
Yeah, so it's significant. So for instance, if I look at the new, the fulfillment, or maybe let me take a look, I didn't speak about what we've invested in Durban. There, and this also is to enable our SMEs. There we've invested 340 million. And then we've got, another 100 million that Take a Lot is investing into their business. So there's continuous investment, ensuring that we're making sure that our SMEs are able to get access to the best AI tools to be able to really grow their businesses as fast as possible. So there's a lot that we're continuously investing in with respect to ensuring that.
Excellent. Ladies and gentlemen, there you go. We talk about inclusion, democratizing logistics for SMMEs, because that's exactly what it is. It is inclusion. So well done, Puti. And the ladies, a round of applause. And I think as you all can witness, that South Africa does have many female top leaders that are excellent by global standards. So may I say again, Puti, Val, super proud of you guys. Thank you. Kabelo, now coming on to you, Abuti, if we were now to consider, the fundamentals that Google has had to take into consideration when you invest in South Africa, and thank you, of course, for your investments, and we would like more, Kabelo. So if maybe you can take us through the fundamentals that you've been having to consider. What processes do you go through? What is your approach? But I think also most importantly, why South Africa? Why South Africa?
Thank you very much.
Thanks, Kabelo.
Thank you very much, Ipeling, and our distinguished panel, honorable ministers. I think what's important for multinationals in particular, and Google specifically, is, of course, this investment conference has been underpinned by discussions around ease of doing business. That's a fundamental aspect of investment consideration for multinationals such as ourselves. But three other aspects are quite key. The first aspect is infrastructure and infrastructure readiness for these types of investments, because the technology, the types of advanced and sophisticated technology requires reliable power and energy plants, etc. And I was pleased to see the efforts underway already with the Minister of Electricity and Energy earlier on in his keynote. The second piece which becomes important is the availability of skills, skilled labor, and to that extent, talent, right? And how do we actually then mobilize, reskill, retool that talent to be able to take advantage of these technologies? Because at the end of the day, deploying sophisticated infrastructure without the skills to be able to, harness, leverage its full potential is just, a futile exercise of deploying expensive hardware in infrastructure, right? The third aspect is how do we actually, make an impact in as far as creating new enterprises from an innovation perspective, right? So I'm glad to hear Puti talking about, the important significance of SMME development. These same SMMEs are actually the people who are best positioned to leverage the platforms for innovation and actually building products that are actually exportable to the rest of the world. And we've seen that through a lot of the engagements that we've had with SMMEs and engaging with SMMEs through, for instance, initiatives such as Google for Startups and Google Hustle Academy, which very much is specifically targeting, bringing founders together with capital, right? And then enabling them through our platforms to find the right, solutions and innovations at scale that can be exportable as well. So these are the three fundamental things that, are key for us to consider when we look at, the suitability of investment from a technology point of view.
And how big are these investments? Because today we're talking money.
Yeah. So from
yeah, it's all about money. I think the president just gave us the marching orders, right? How much?
So Belenga, I love the challenge, and I think I'm pleased to say that since our initial pledge in 2023, we pledged $1 billion, and we've actually exceeded that investment to date, just in terms of how much infrastructure and investments we've made. We launched our cloud region officially last year. And with that launch of the region, which, by the way, amounted to $5.8 billion, and effectively we anticipate that that's going to have a multiplier contribution to our GDP to the tune of about $90 billion by 2030. AI, in and of itself, which is part and parcel of the technology that underpins the investments that we've made, is already today estimated to be about $3 billion in terms of contribution to the South African economy. And we're expecting that to actually grow threefold by 2030 to about $9 billion at sort of conservative estimates. The global market for AI is according to World Economic Forum, is about 15.7 trillion US dollars. And that's the extent to which this infrastructure is impacting the different sectors. We believe that in terms of the infrastructure investments around our East Coast and West Coast submarine cable systems, the Equiano and Umoja cable systems, which have termination points across the entire coastline of South Africa, that's contributed already, and we expect that contribution to grow to about $90 billion by 2030. That's infrastructure that effectively has increased our capacity from a connectivity to the internet, giving access to international corridors from a digital space and cyberspace perspective. That's increased our capacity 20-fold, right? Because the reality of it is that AI, without the requisite, back-end infrastructure investment, it is not going to yield the desired, outcomes.
Indeed.
Latency is the is the enemy of AI technologies, right, and digital technologies. And therefore, when you invest in infrastructure, you enable digitalization, which enables a number of different industries, including the stock exchange, et cetera, in terms of online real-time trading, right? So that's what we see.
Great.
And more importantly, I think last but not least, is just around skills, which is a fundamental endeavor for us, and one we continue to invest in. We invested $17 million in both direct grant funding to universities, tertiary institutions. In actual fact, just yesterday we hosted the Deputy Minister of Higher Education, Ms. Gondwe, Dr. Gondwe, I should say, in launching a new initiative where we're going to be giving scholarships, 10,000 scholarships to higher education, academia, for a train-the-trainer type of program, because the intent is that we want to accelerate, reskilling, our skilled labor force to reach a much higher, kind of target audience.
Fantastic, Kabelo. Thank you. Thank you. Thank you so much for your intervention. I wanted to just make sure, because we've got 6 minutes left, that at least we could take 1 or 2 questions from the floor, in case our audience would like to ask us just 1 or 2 questions. Puti? I think your
Where
mic.
I said that Takealot was investing 100 million, what I meant to say was that it's actually just over R1 billion. So excuse me for that.
No, great. Thank you. Thank you for clarifying that. Ladies and gentlemen, a round of applause for Kabelo. Kabelo, thank you so much, and thanks for those investments. And as I said, we would like more. Thank you, of course, and to Puti too. Ladies and gentlemen, there you go. I think it's very clear. The narrative is flowing. Our investment case is very, very strong, underpinned by governance, as I said, underpinned by also political buy-in, because we've also told you about, the benefits of GNU. And I think what is also important, if you've listened to our president and you've listened to Minister Pakstau, you've listened to Minister Ramokgopa, Minister Godongwane, Minister McPherson, you can just pick up that coherent story. And that is the job of Brand SA, to ensure that when we narrate stuff, that we have a coherent story and a very similar story. So, ministers, let me start with yourselves just to say thank you very much for your support and the hard work. We do realize, we know how busy you are, and we understand that you've got a lot of work to do.
I just wanted to say, after listening to Puti say how many people are on after listening to Puti say how many people are on Property 24, we might send some buildings on your way just to try and get them moving. So that might be a good answer to some of the problems that we have.
Right? No, thank you. Thank you, Minister. Ladies and gentlemen, please a round of applause for our esteemed panel. And if we've got 1 or 2 questions that we can take quickly before we close. Do you have 1 or 2 questions? Oh, okay. We need someone that can just give you the mic.
Yes, sir. Sir, share with me your question. I'll make sure it's loud. What is your question? Yes. Yes. Kabelo, that's there. Okay. 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 Ipeleng, I have a better idea. This gentleman has a specific question for Kabelo. So what I suggest is that I, sir, I'm going to personally be responsible for a one-on-one for you and Kabelo after this panel due to time. Thank you very much to our panelists. Thank you very much, Ipeleng, as well. Thank you. Thank you. You guys can leave. Yes, you're free to go. Another round of applause for our panel, please. Right. We're going to keep it moving. Our next topic is about a very, very important topic. And this one is focused on what does it mean to finance the future using energy infrastructure as a catalyst for investment, industrialization, and competitiveness. Now, energy infrastructure, as we all know, sits at the center of South Africa's growth agenda as both an enabler of investment and a driver of industrialization and competitiveness. The question now is how to finance this next phase at scale and how to align capital, policy, and infrastructure delivery. Earlier on, we got a proper masterclass from Minister Ramokgopa about this industry, about the opportunities that are available, about where we stack up in the world and what the opportunities are for us as South Africans and, of course, as investors in South Africa. But now we're going to get into the details, and we're going to spend some time trying to see how do we not only talk about these opportunities, but really close them and make sure that the investment actually delivers value. Moderating this discussion is the Premier of the Limpopo Province, Dr. Poppy Ramathuba. She will be joined, and this is her panel, high quality delegation, may I add, starting from the top, the CEO of Eskom, Mr. Dan Marokane, will be joined by the CEO of the DBSA, Ms. Boitumelo Musako. She will also be joined by the Executive Director of the Presidential Climate Commission, Ms. Dora Modise, as well as the President and CEO of the Africa Finance Corporation, Mr. Samalia Zubairu. Also part of the panel is the CEO of SAIC. You heard from him earlier on, contributing and making sure that 60 billion rands from SAIC is part of the pledges today. He, Mr. Simon Baloyi, will also be joining the panel. And finally, the Group CEO of Seriti Resources Holdings, Mr. Mike Teke. A round of applause for our panelists, ladies and gentlemen. Let me just clarify something before I get off stage and hand over to the Premier of the Limpopo Province. Unfortunately, ladies and gentlemen, due to the very packed program we've got today, we do not have provision for questions from the floor. So unfortunately, there won't be that kind of engagement. That's why I had to find a way to manage the promise that was made to this gentleman. So please bear with us. There won't be an opportunity for you to be asking questions from the floor as a result of the action-packed program we have. Dr. Poppy Ramathuba, over to you, ma'am.
Thank you, distinguished guests, colleagues, and partners. It's my pleasure to welcome all of you in this important discussion, especially focusing on the financing future with a particular focus on how energy infrastructure can serve as a catalyst for investment, industrialization, and also competitiveness. Let me confess from the beginning that I'm a premier of a province which late last year held its own investment conference, where out of the 170 billion pledges that we made, 70% of them were towards the renewable energy. And this is in addition to the fact that the question of land, the question of sun is not a problem. It is in abundance. Therefore, it's very critical for me to find myself being here to get answers and solutions towards the financing. So South Africa's energy transition is not just a great story. It is an industrialization story. So by transition to reliable, renewable, and sustainable energy systems, countries can unlock new economic value chains, reduce manufacturing costs, and also meet the global sustainable standards, such as those that we see the European Union and the United Kingdom. So these sessions, colleagues, will look at how energy infrastructure can act as a catalyst to drive investment, industrial development, and the role of finance in structuring future industries. On that note, I am firstly going to invite one of the most celebrated CEOs in our country, after the good work that we've seen him doing together with the collective at Eskom, Mr. Marokane. South Africa is in the process of expanding the transmission grid and distributing infrastructure with a 450 billion expansion plan to support renewable projects. So help us to understand how do we use this catalyst investment and industrialization.
Premier, thank you very much. Good afternoon, ladies and gentlemen. This morning, the Minister showcased the potential for the country from a renewables perspective. One of the backbones of really harvesting that capacity that is so abundant in distal areas located far from the load centers is the need to actually get the transmission network up in place. And we have all said this before, 14,000 kilometers that we now need to build in 9 years left to ensure that we can really bring about the realization of the investment opportunities that are sitting over there. The key activity of innovation that's being announced also this morning is the aspect of the independent transmission projects. The credit guarantee vehicle is going to enable shielding the balance sheet of the state to enable these investments to take place. Just from a numbers perspective, Premier, 1,200 or so kilometers are earmarked for this ITP phase 1. We are internally already having conversations about what is the next phase going to look like from a quantum perspective. When we do so, we will of course be taking into consideration the build rate that is already achieved to date, and also look at the need for supplementing the generation capacity that we have. We have dealt with the issue of the reliability of our coal fleet. We are there and about. In as far as our energy availability factor is concerned, it's important that we build very quickly, rapidly to 2030, new capacity from renewables, and hence the aspect of the participation of private sector in the ITP is very important, that we release it and we enable broader participation in that space.
Thank you. Thank you. Let me also welcome Mr. Simon Baloyi on a very positive note. Congratulations and welcome. We welcome the 60 billion that you have just committed, but this welcome is not for free. I hope that Limpopo will get a share. I can't pay toll gates for nothing. Limpopo will have to get, but in terms of the green hydrogen ecosystems, how do we position South Africa as a global producer of green hydrogen, aiming to create new sustainable industrial value chains?
Thank you, Premier. The green hydrogen will first and foremost require renewable energy, because renewable energy has to come first. And I'm very glad, if I look at the progress that South Africa is making, that regionally, if you look at the regional economies, we are up to 10 gigawatts of renewable energy. That has been enabled by the reforms that the President and the Minister spoke about. And that renewable energy will be anchored on the grid, because we will need the grid in order to expand the renewable energy. And then spoke about the ITP, which requires almost 500 billion, which is half a trillion rand of investments. That will be required to enable that grid. That is going to require public and private partnership. You will then, once you have abundant renewable energy, you'll need anchor demand. We cannot work on all of it being exported. And if you look at companies like Sasol, that's where we come in. Today, Sasol uses 2.5 million tons of green hydrogen that we're producing from coal. And that is such a powerful anchor demand that as we have abundance in renewables and the price of green hydrogen comes down, we can then use that hydrogen into our facilities, and then you've got a springboard for us to be able to export that. And the cheapest renewable energy, of course, we know we can produce in, the country is blessed, but the Northern Cape, especially in the Buchebai region, has got a massive advantage in terms of renewable energy resources. So I know when we've looked at the infrastructure planning as well, that there's a deep water port that is being planned there, and that will allow, once we have firstly renewable energy, then you've got anchor demand, you then have a port, and that port will then allow for the exporting of that to other markets and countries who are not blessed with renewable energy resources like our country.
Mr. Mike Tech from Siriti Resources Holdings. You know, one of the most successful models that has attracted billions of private capital is the RAPE, the Renewable Energy Independent Power Producer Procurement Program. Many of us struggle with the acronym. For what we would appreciate to understand now is that what are the lessons that we have learned so far and what needs to be done to expand this program in order to enable more private sector participation and also more critically in terms of the competitive power pricing so that we can be able to achieve both the competitiveness and also reliability of supply and achieve our public objectives of affordable and reliable energy, which is what all of us are looking for.
So we are known to be, we were originally a coal mining business, and we took advantage of becoming an energy business by investing in Seriti Green. And what we've done, we've taken advantage of the power of collaboration and partnership, and let me explain. When we originally started with this investment process, we firstly built a wind energy business where we started with 122 wind turbines to produce 900 megawatts in the Mpumalanga region, in the towns of Morganzone, Bethal, and Emler, and Duvel. And where we are now, to strengthen that power of collaboration, what we are building now, we've just built the first main transmission substation in the area. And that main transmission substation, Vunumoya, has been handed over to Eskom, which shows up the balance sheet of Eskom, number one, but it strengthens our position in the grid. Secondly, our plan is to go with a multi-build of main transmission substations. We're looking at an extra 4 in different provinces. Why? We want to make sure that we strengthen the grid, and strengthening the grid, we will make sure that it strengthens our collaboration and partnership with organizations like Eskom. How do we fund that? One, banks have come working with us, not in terms of investment only, but becoming shareholders as well in the business. So in Seriti Green, we have 2 banks. We've got Standard Bank and RMB, who are shareholders in our business. But beyond that, we're looking at an opportunity in some of our mines, our coal mines, where we're going to use PV and battery energy storage solutions. And in that partnership as well, we'll be working with organizations like Eskom and ensuring that the government participates in terms of collaboration and partnership. In other words, expediting the approval processes to ensure that we continue with those builds. So the expectation is that we will spend an extra 10 billion rand in expanding this project, ending up having delivered 900 megawatts of wind energy plus PV and battery energy solutions.
No, thank you. Maybe that will also bring me Modise to say, in terms of battery energy storage systems, what other opportunities are there? Opportunities for collaborations, especially with other African countries, taking into account the critical resource that remains untapped as a follow-up from your side as a Presidential Climate Commission.
Yes. Okay. Thank you very much, Premier. Correctly put, and as demonstrated by the Minister earlier today, South Africa is quite rich in resources that would allow for renewables deployment, as well as battery storage associated with that, especially in the Northern Cape region. Collaboration both within the country and internationally as a given. That's the main issue is how are we going to craft those collaborative arrangements such that they talk to our own green industrialization agenda. So with the energy transitions or energy future, it's mainly the main gist of how we will crack it is linking it to industrial development. And what we are doing here today, and we were joking about it earlier today, that we actually have everyone in the room. So we no longer just talk about let's collaborate and talk to each other, because this is exactly what we are doing. So before we even get to storage of renewable energy, battery storage and all of that, what are those industrial nodes that we are feeding? Dan just spoke to the need for grid expansion, which is the key to really unlocking green industrialization, renewable energy deployment, and that it reaches centers that it needs to reach. But linked to that, especially where you're talking about solar and wind, you need to store that decisively. So the policy signals are there. Investors are here. So all we need is just to work on investable pipelines and clear pathways in terms of how we then present that whole package to investors that are in the room to say South Africa is investable and ready to do business. And a lot of what we do at the PCC is really in collaboration with DBSA, and maybe without leading you, Premier, as facilitator, will probably go to the CEO now in terms of how DBSA is assisting, especially in the issues of credit guarantee vehicle, project preparation facilities, such that we are able to unlock, and not just unlocking, ensuring that everyone has an opportunity to participate. As the PCC, for us, we are very strong on leave no one behind. So there's still a lot of your small, medium enterprises that are struggling to play a role in this space. And battery technologies, as you mentioned, is the quick win in terms of how we then match them with either global counterparts and those nationally that are already doing the work. For example, even Sasol can come on board. Thank you.
No, thank you very much. I know Musako. I know you know I'm coming to you because the role of blended finance and risk mitigation, the reality and the fact of the matter is that commercial lenders are at times very reluctant in terms of them to fund high-risk infrastructure. And we need to consider what role can our development finance institutions, your IDC, your DBSA, and how can they work with the international partners for us to be able to achieve this energy infrastructure, because there are many projects out there that cannot access the funding based on the fact of all the red tapes that are there within the commercial lenders.
Okay. Thank you, Honorable Minister. Good afternoon to the panelists and everyone in the audience today. When you look at the infrastructure need that was articulated by the Minister of Electricity and the Minister of Transport, what we require within the South Africa landscape is instruments that are not going to enable implementation on a project-by-project basis, but on a programmatic scale, because that is what is required at this stage. When you look at the IRP 2025, it is intentional in that it is also aligned to the ITP, so that transmission program. And it's very clear in terms of milestones that have to be achieved. As a development finance institution, it's critical for us that within the infrastructure system, between ourselves, IDC, ESA, the Minister of Dean McPherson was here, ESA led by Mametse, we need to work as a system to actually enable the rollout of this infrastructure. So what is it? This is the how. How are we going to do that? Dan has already articulated the credit guarantee vehicle, which was created as a partnership between the National Treasury, the World Bank, and now being housed at the DBSA. There's already an investment of $500 million that has been allocated, and that is a de-risking instrument that will be a first loss facility to enable institutional capital mobilization into the first phase of the ITP program. So there's already pre-approved bidders who will then be supported through that. The second thing is around how we then mobilize different types of capital. As an institution, we have mobilized concessional funds from different DFIs, development finance institutions globally. And when we mobilize this capital for the various projects that we're going to be implementing, for instance, the embedded generation program that we have within the DBSA to support self-generation projects, when we mobilize this concessional capital, we'll then, provide it as part of a blend to lower the cost of funding when we then on lend into the projects. These mechanisms we use to ensure that we lower the cost of capital that then goes into the various projects. So these are the mechanisms that we then use. The last thing that I want to mention is that in terms of our decadal strategy, we have the 7 pillars. I'm actually going to just mention 3. Is as an institution, we are building our project preparation factory. We are driving regional integration, and thirdly, we are enabling a just transition. And that means with these aspirations, we as an institution are ready to allocate capital to project preparation. With every conference that you go to, you'll be hearing that there's no project preparation, there's no bankable projects. We as an institution are deliberate and intentional in making sure that we allocate capital to project preparation. The last thing is, being in South Africa, transformation remains key, and it's important that we also enable the support of participation of the previously disadvantaged into these opportunities by allocating capital, by creating the right instruments from project preparation to equity investment to MES and senior lends. So as a DFI, we are here to enable the execution of these of this energy IRP for the next 10 years, and I encourage you to come and have a conversation with us. Thank you.
No, thank you very much, because that one is the last point that you were raising. Most of us are not even aware that you also fund, besides financing, you also have a critical role where you would assist projects in terms of their preparation so that they become investable. Because most of the projects, when we take them to commercial investors, you will be told it's not bankable. So really appreciate the fact that DBSA has got that a very critical role that they play. The AFC's 2025 State of Africa Infrastructure Report. I'm coming to you, CEO. I'm Samalia Zubair. Yes, I'm coming to you, Mr. President and the CEO. If that report estimated that Africa holds over 4 trillion in domestic investable capital across, whether it's your pension, your insurances, and also your banking assets. Yes, most of this remains in short-term instruments. So how can this capital be mobilized effectively so that it can begin to assist for energy and also for industrial infrastructure financing?
Thank you, Premier. And thanks to SAIC for this important event, which we are convening at a time of profound global uncertainty, with the conflict in the Middle East, making energy markets more volatile, which is why the discussions today about building the future is very important. Because at a time like this, investment opportunities are not found, they're built. And they're built by ensuring that the right investments are made in infrastructure and energy to ensure that we can create the jobs that are required, for the future. Mr. President Ramaphosa today, when he made his remarks, he mentioned a couple of points which I want to emphasize. He mentioned local content. He mentioned domestic capital mobilization. So the whole idea of our research into Africa's domestic capital pools is the fact that as Africans, we must build our future now, not wait for it to happen. And building the future now means we must finance it. Financing it means we must use our domestic capital pools to do that. So we have over $1.1 trillion in pension funds and insurance funds. Interestingly, over half of it is here in South Africa. So what is important is how can we ensure that we have the policy reforms that recognize infrastructure as an asset class. Botumelo just talked about project preparation and talked about, we had the Minister of Energy, we had several other people talk about the need for investing in infrastructure. So we need to ensure that the rules recognize pension fund as an asset class and there's allocation into infrastructure. What that means is that we shouldn't just be thinking about how we are managing the pension funds for the workers. We should be thinking about the children of the pension fund holders that we're managing. That means investing in infrastructure, because once you invest in infrastructure, you're investing in growth. You're investing in the future. And it is that future that creates the jobs. So if we have asset allocation going directly into infrastructure, in some jurisdictions we have things like 5% for infrastructure private equity to take care of project preparation and equity investments. We have 15% going into infrastructure bonds or infrastructure loans. We have 5% going to private equity venture capital. All of this make it possible for you to finance growth and finance the future. If you look at other mature markets like Canada and Australia, most of the infrastructure are owned by pension funds. So we must be thinking about how we can replicate same on the continent. And that means ensuring that we have created the instruments that will allow for the funds to flow. And creating those instruments require cooperation from the likes of us, DBSA, and other development finance institutions to provide the guarantees that will make the pension funds comfortable to take a bet on the future, which they have to do by their design. It's just that they're thinking about it in a different way. So we have to help them understand that investing in the future means investing in infrastructure, and it cannot be by accident. It has to be intentional. It has to be intentional that there is asset allocation that goes into infrastructure equity, infrastructure bonds, and private equity and venture capital to fund the creativity of various Africans, especially here in South Africa. So again, just to summarize, we need to be thinking about how we can focus more on industry, industrialization, how to do more processing of African resources on the continent. We need to be thinking about how we can formalize the economy. So most of Africa's economy is informal. So we need to be thinking about how to use digitalization. So I see digitalization is part of the objectives of this conference. So digitalization helps formalize the informal economy. So there has to be deliberate attempts to that. I heard about people talking about the need to create Silicon Valley, African Silicon Valley in Durban. All of these are very important initiatives, and it will only happen when we're investing in infrastructure, we're investing in industrialization, and we're taking deliberate efforts to build the future now and not wait for it.
Thank you, President and CEO. Minister Ramokgopa spoke of the green hydrogen projects across Namibia, Western Cape, Northern Cape, and I think also, if I'm not mistaken, Eastern Cape, that could form globally competitive export corridor. So what regulatory alignment is required to enable cross-border scale and also at the same time attract anchor investors?
So again, very good question, and I actually like that map that he showed because it showed where the most viable projects can be located. And again, it's just policy certainty, which we can see that there's some of it in place already in South Africa. I think the key thing now is to ensure that capital flows there. I don't want us to underestimate the need for domestic capital going into investments locally. See, infrastructure is actually financed in the main in local currency because it is paid for in local currency. So you need your domestic capital pools to finance infrastructure. I remember a conversation I had earlier, several years ago, with some Chinese partners that we have. They said to me that one of the things that people don't realize about the success of China and most of Asia is that they made sure that they finance their development. And that if Africa wants to progress, Africa must finance its development. So the president's remark on domestic capital mobilization, it's up and it's what is required to finance all these green hydrogen projects that we've talked about. So it is essentially aligning the reforms that I've mentioned to ensure that African infrastructure or infrastructure in South Africa is recognized as an asset class, and that the pension regulation allows for funds to flow directly into that space. Once that is done, then our jobs as multilateral development banks would be to help develop to de-risk these opportunities so that we can invest our own capital and get other capital pools to come in alongside us. And then we can build out the green hydrogen projects that the minister referred to.
No, thank you. I just want to go back to Mr. Tech from the private sector to say what is the role of the private sector to drive the just energy transition and also expansion planned to support renewable energy projects.
The private sector role is one, from an investment point of view, is to commit to funding the projects that they identify. I gave you an example of the main transmission substations that we're building, that we are providing those and handing them over to Eskom. That's an example of partnership and ensuring that it helps insuring up the balance sheet of Eskom as an example. The second one is to ensure that as we invest in these projects, we uplift the communities within which we operate. Towns like where we operate now with our renewable energy, Davil, Bethel, and Mogenson, are towns that a lot of people have ignored in the past. But with the arrival of an investment like that from the private sector, our expectation is to collaborate with the state in ensuring that whatever project of an infrastructure size, we as the private sector commit to fund it, to run those projects, and to commit for the long term. So that's basically the responsibility that we carry.
Thank you, Mr. Teke. Let me go back to CEO Eskom. Maybe one of the challenges that has been raised is the transmission bottlenecks that have been identified as key factor limiting the new generation connection. What specific grid corridors or regions should we prioritize to support rapid renewable and industrial expansion?
No, thank you, Premier. Very briefly, we have to take a dual track in as far as decongesting the grid access is concerned. I've spoken about the inclusion of the private sector through the ITP in as far as building transmission lines is concerned. The second point that we really need to pay attention to, especially now, between now and 2030, as we expect more renewable penetration in the grid system, we have to start investing in the stability of dispatchable power within the grid. So gas to power is a very important project. We need to start paying attention to these dispatchable technologies. We need to invest more in battery storage to allow ourselves the ability to really modulate and take out peaks when wind and solar are not there. These are elements that are going to receive a lot more attention as we build up to the 2030 targets of the IRP. Thank you.
No, thank you. Special thanks to our distinguished panelists for such a rich and also insightful discussions, and to all our audience, we are appreciating. Unfortunately, they said time is not on our side. We would have loved to continue with this very critical debate, because what it means to finance the future using energy infrastructure, it's what we currently need for us to be able to change the status quo. Those much needed jobs by especially our young people in our country can be achieved through the financing of the future and focusing. Don't forget, I said to you, I come from a province where in the sun and the land, it's in abundance. We might not have the wind. So you are all welcome. Limpopo is ready to receive you.
Thank you very much to the panel that has just taken place, and thank you very much for presenting to us partnerships that are unlocked when we work with development finance institutions and multilateral development banks, who at least help to get projects underway when we are talking about scaling things up. Our topic now is how South Africa can leverage its critical mineral endowment to build competitive battery and clean energy value chains, supported by the reform process, infrastructure, and industrial policy. I mean, I was really taken aback recently when I heard that in some markets, the EU to be specific, within the next 10 years, everybody's expected to be driving an EV. And those are lucrative markets, and you just wonder whether or not these models are going to replicate themselves the world over. So what really matters is to prepare for what seems to be the inevitable. As we are talking about leveraging critical mineral endowments to build competitive battery and clean energy value chains, may I introduce to you the panel. It's going to be moderated by Makgoshi Legete, who's the Chief Executive Officer of the Industrial Development Corporation of South Africa. The panel will be comprised of the Honorable Minister of Mineral and Petroleum Resources in South Africa, Gwede Mantashe. There'll also be Mr. Philip Tobias, the Chief Executive Officer of African Rainbow Minerals, ARM. They'll be joined by Ms. Nompumelelo Zigalala, the Chief Executive Officer of Kumba Iron Ore. Joining them is a senior mining specialist at the World Bank, Mr. Martin Lokantz. Mr. Mzila Mtenjani, we all know him. He's the Chief Executive Officer of the Mineral Councils South Africa. And also joining them is Ms. Philisiwe Sibiya, who's the chairperson of the AECI. Please welcome the panel warmly. Hey.
Our Minister, thank you. Thank you for joining, Minister. I was worried, how are we going to do it? Ladies and gentlemen, good afternoon. We are here to discuss the critical minerals, an important topic in South Africa. This panel will discuss how South Africa can leverage its critical mineral endowment to build competitive battery and clean energy value chains. Our mineral wealth is well known. We have PGMs, manganese, vanadium, and more. But the real question is how we translate that geological advantage into globally competitive industries that can attract capital, build capability, and generate jobs and exports. This is not just about mining. It's about policy certainty, exploration, infrastructure, financing, regional integration, and commercial viability. The purpose of this session is practical, to move beyond aspiration and ask what must change, what is already investable, and what will unlock the next wave of capital. I'm going to ask my panelists to ground their responses in specific experiences and forward-looking signals to move us beyond policy to projects on the ground. To start off, I would like to welcome Honorable Minister Gwede Mantashe, South Africa's Minister of Mineral and Petroleum Resources. Minister Mantashe has been at the center of shaping policy for the mining, petroleum, and energy sectors. A round of applause for the Minister. Thank you. Minister, let me first thank you for delivering the critical minerals and metal strategy, a national roadmap to leverage the country's rich mineral endowment for green energy, digitization, and industrialization. I also want to thank you for bringing this topic to the global stage, Minister, as you put this on South Africa's agenda for the G20 presidency last year. Just on the G20, Minister, I know you are not invited this year. Can you share with us what clear outcomes you were able to achieve in coalescing support for the critical minerals for development during your chairship of the G20, Minister? And I think this is more relevant, and I'm glad that you are here at home and not wherever they are.
Yes, the first thing that we achieved was to put the critical mineral strategy on the table. It was accepted by everybody. More important, that strategy is beneficiation close to the point of production, which means we are dealing with the pit to port policy. We want to add value from where we mine and export value-added minerals. That, as a principle, is in the policy now. Africa is still fragmented, and our effort should be on uniting Africa so that they speak with one voice. But more important is to invest in exploration, because you can talk of endowment. If you are not doing exploration, you are not going to discover the reality of how much are you endowed. So the exploration fund that we started with IDC, we started as 400 million rand. It's more than 2 billion rand now. We're hoping that other companies will take an interest and grow it to be a big fund, so that we can look into what we have and begin to add value on what we have.
Indeed, Minister, and thank you for entrusting the IDC with the management of the Junior Mining Exploration Fund, and we're quite pleased that Anglo has come on board. And indeed, we hope that other global and national mining companies will join. Let me move to Mpumi. Mpumi, competitive battery and clean energy value chains ultimately depend on a credible future supply pipeline. Could you please speak to the role of exploration in South Africa's strategy, and specifically how, through partnerships such as the one that Minister and I just mentioned on the Junior Mining Exploration Fund, we can crowd in private capital?
Thank you, Mahoshi. So the minister has already started talking about exploration, and all of us know our country, as well as the rest of the continent, is well endowed with multiple minerals. The biggest thing is about finding those minerals, and exploration is the beginning of any mining value chain. And to put it in context, it takes about 13 to 15 years from when you start exploring to actually building a mine. And as the minister said, there are no guarantees that when you explore, you will actually find a mine that will be bankable. So the element of speeding up exploration is something that is absolutely key for us. And what's encouraging for the country as a whole, before I get to our exciting news, is the fact that clearly multiple discussions are taking place on the policy front, because we do need to increase the level of exploration investment in the country. And if I just look at data, in 2023, globally, there was about $13 billion spent on exploration, and our continent as a whole only attracted around 10% of that, and our country, South Africa, only attracted 1% of that. So we do actually want to see that number growing. And on the policy front, the various discussions that are taking place around the review of the MPRDA, and also the work that's taking place around the cadastral system, will certainly assist with increasing the number. Now, coming back to your actual question, so from an Anglo-American perspective as well as Kumba, we fundamentally believe in investing in exploration. And we also believe in the element of driving for inclusive growth and supporting junior explorers. And that is why when we actually heard about the 400 million rands that the minister spoke about in partnership with the IDC, our global CEO, Duncan Warnblood, then thought that it would be good, to the minister's point, to actually top that up. And we subsequently announced that there will be 600 million rands that will be added to this fund, which will then take it to 1 billion rands. And this is part of the merger, which is essentially taking place between Anglo-American as well as Tech Resources. And fundamentally, we think that more players need to come forward and invest in exploration. Mining has so much potential in our country, but it all starts with exploration, and all of us need to actually lend a hand when it comes to this.
Thank you, Mpumi, and really appreciate the partnership that we have with yourself. We do believe, as you said, that mining starts with exploration, and the resources for that are required. Let me now turn to Mr. Philip Tobias, the CEO of African Rainbow Minerals. African Rainbow Minerals has been actively exploring opportunities linked to energy transition minerals. So beyond the high-level opportunity, Philip, can you speak to the specific initiatives or projects that ARM is currently pursuing or assessing? And more broadly, what is African Rainbow Minerals' strategic approach to positioning itself in these value chains over the medium term?
Thank you very much, Makhosi, and then to the Minister, Honorable Minister, and ministers in the House, all distinguished guests. It takes about 5 key things, basically, to start a mine. I mean, your mineral resource capital is one of the key things, financial capital, human resource capital, and infrastructure. So from the African Rainbow Minerals point of view, we're quite blessed in terms of the portfolio relevance. If you look at the minerals that we're mining, I mean, the platinum group metals, which is basically highly critical under the South African critical mineral strategy. And we know that the use thereof, at the catalytic converters today and the future potential use with the hydrogen technology. We are very pleased to see the progress that is being made in that space. I mean, if you look also, we have manganese, a 4 million ton per annum producer, Black Rock mine. And we know that manganese plays a key role in terms of the battery storage, demand growing in the BEVs in today's times, and also in the stationary storage as well. We also, produce chrome, as a byproduct, and we are also basically starting to treat that at our Nkomati mine that has been on care and maintenance for years. And we know that that is very crucial, for your concentrated solar power panels, also renewable infrastructure. The Nkomati that has been on care and maintenance, where we're joint venture partners with Norilsk, we basically acquired their 50% portion, and we own it now 100%. We are currently looking at scenarios to restart that, and that has a significant role as well in the battery chemistries, And lastly, with our latest investment at SAIC Copper, which is a project in Canada. It's a copper project with a byproduct of molybdenum and silver and that. So these are basically future-facing minerals, which are transition-related minerals. We making deliberate investment decisions to make sure that we increase our exposure in that regard. And also in terms of the mining value chain, we're looking at how best we can continue to really advance our decarbonization, journey. We currently have a machine that is a reef cutting that is ready to start cutting at Bokone. The intent being to basically stop the normal, blasting and that's reducing external waste, improving the quality of the ore. We basically also using some tunnel boring machine, so to try and really reduce these external waste. So we are aligning, our mining processes as well to make sure that they contribute towards the bigger scale.
Thank you, Philip. And it's quite important because we always, when you talk about climate change, we focus on the mitigation. And what you're actually doing is adapting to the current environment through processes that you're engaged in, which is really appreciated. I will now move to Ms. Pilisiwe, who is the chair of AECI. And AECI is a diversified group with mining and chemicals businesses across many jurisdictions. Pilisiwe, the global race for critical minerals is unfolding along regional frameworks such as the AFCFTA. And as you know, this region is endowed with minerals. I think 17 of the critical minerals, Minister, are in this region. So how should South Africa position itself within Southern African value chains? Not as a competitor, but to our neighbors, but as a hub for complementary, scalable battery and clean energy industries.
You make an important point, Mahoshi, that this debate is not about whether we've got the minerals. It is proven that South Africa controls over 90% of PGMs, over 70% of manganese. If you add the rest of the region, you've got lithium next door in Zimbabwe, you've got copper, cobalt in Zimbabwe, in DRC. That is a critical starting point in terms of what it means for the country and the region. The question then is not so much the upstream debate about the resource, but it's how do we move to the middle? How do we position ourselves from being an extractive economy to a manufacturing hub? How do we utilize the manganese to move and steadily move into component manufacturing for batteries, for example? For that to happen, we need to operate as a region. We need to be very scientific where we choose to play in the segment, because beneficiation is a word, it's a vast space where you can participate. So where are we the strongest? Where are we most competitive in terms of then becoming and steadily moving into midstream manufacturing, which is where we need to get to. South Africa historically has been a giant in chemical manufacturing. This country founded AECI, who I'm a chairman of, in 1896. Today we dominate and play a very big role in mining in the continent. South Africa started SASO in 1950. South Africa started OMIA in 1954. So we've got a very strong base of creating industrial manufacturing giants. We have lost our mojo in the last few decades, but it's a critical starting point because we have got that IP as a country. But what do we do with that cluster that already exists? At the moment, it's under critical jeopardy with the competition coming, especially from China. So how do you strengthen using what you already have? I've just mentioned those three companies. For you to move into battery manufacturing, you need a very strong industrial chemical producing IP. South Africa has got that. And that sets South Africa very well to create a hub, a Southern African hub, that can really support the region using the infrastructure that we have, using the very deep capital markets that we have. To the President's point, Africa needs to be able to fund its own growth. So that is the part that we need to look at, is rather than operating as a single country in the debate around battery manufacturing, but also around renewables as a whole, even hydrogen that we're talking about, the real strength is regional. And so if you are able to position South Africa not just as an aggregator of exports of raw materials, but a place where you've got the manufacturing capability, you've got the industrial hub that is already there, and you've got all the critical components that are needed in terms of infrastructure, then you've got a critical ground that is important for you to set up the industry that we need to set up as a component producer in battery manufacturing.
Thank you, Pilisiwe. And I think you mentioned a very important element regarding what is it that is required to get to this end state. So let me turn to Mzila, who is the CEO of the Minerals Council here in South Africa. So Mzila, looking across the sector as a whole, what are the most binding system-wide constraints currently holding back large-scale investment into critical mineral and clean energy value chains? And which of these must be addressed first to unlock scale?
Thank you very much for your question. Good afternoon to everyone and all protocol observed. And 2 points perhaps before I come to your question. If I were to personify critical minerals, I would say they would probably be standing here and say they want all the other things. They want all the things that other minerals also need in order to be developed. And so the importance of that statement is that we're not having a new conversation because we're talking about critical minerals. And then I want to make a point around the contribution from the earlier speakers around exploration. And my assessment and thesis is that South Africa finds itself in a very structural transition. The mines that we are operating today were founded, we spoke of gold 1886. Minerals Council is 136 years old. So we've kind of forgotten exploration, and we need to reintroduce the DNA of exploration into the country in order to get our mojo back, as you said. And so what that helps me is really just to be settled in terms of the work that we then need to do in order to get, to get exploration and mining done. And so to come back to your question, I think the conversation so far has really focused on what I call the hard infrastructure, which actually needs minerals and materials. But I think there's also a conversation and emphasis that needs to be made on what I'd like to call the soft infrastructure. And this is really around the policy environment. Policy certainty is absolutely critical because mining, as you heard, Mpumi, 15 years for exploration, it's another 30 to 40 years of the actual mining. There's a significant amount of capital that is required to be able to extract those minerals. And so policy certainty, which provides for security of tenure, means that any investor who comes into mine is assured of a return on that capital. And then the other point is around the administration. And here I'm referring to as simple things of, well, as simple as they can be, the cadastral system in terms of exploration. Do I know, can I find what I'm looking for? And how easy is it to access it? And how easy is it to translate it into mining? And where we are as a country, we've got the MRD bill, which we have been engaging with the DMPR. And I think the MRD bill today really has an opportunity to provide for that policy certainty, for that security of tenure, both for exploration and for mining. And that will then provide for the confidence and the sentiment to shift significantly beyond where we are already in terms of the hard infrastructure and begin to see a significant amount of capital flowing into mining. And that will also give confidence to then the beneficiation and the end use for these minerals that we will need for infrastructure development, for energy, utilities, and many other things that we need the metals for.
Thanks, Mzila. And indeed, speaking to policy certainty, let me introduce Dr. Martin Lowkant, Senior Mining Specialist at the World Bank. Martin brings here a global perspective on standards, ESG compliance, and responsible sourcing. Martin, battery and energy value chains increasingly depend on standards, on traceability, and ESG compliance. What role can industry coordination play in ensuring that South Africa, and indeed the region's minerals, meet these global requirements? And how important is this for attracting long-term investments?
Yeah, thanks for the question. Look, let me just start by saying the regulatory landscape has shifted. I think this is a starting point for an honest conversation, is acknowledging that the global market has fundamentally changed. So ESG and responsible sourcing, these used to be differentiators. Companies embodied these principles because they wanted to differentiate their products. However, these days, it's really the baseline for market access and market entry. Two examples would be the EU Critical Minerals Act, which was passed, and even the United States Inflation Reduction Act. These two pieces of legislation, access to really, really big markets, shifted voluntary corporate commitments to legally binding trade and procurement conditions. And these require suppliers across their value chains to demonstrate high ESG standards, verifiable carbon footprint, fair labor conditions, and traceability of those supply chains. Now, the World Bank has just completed an analysis, a report on the battery value chains. And this report, which anybody can find online, there's actually 3 of them, so just look up the Battery Value Chains World Bank. It's unambiguous on this point that without investment in environmentally responsible refining practices and sustainable sourcing, South Africa risks being excluded from key markets even as its mineral resources remain in demand. Okay, I think this is a key message out of that report. Now, coordination, coming to the point on coordination on standards and the traceability, it's not a nice to have. This value chain is interconnected. There's the mining companies, there's the processors, sometimes there's the same. There's the midstream, which goes beyond often the capabilities of the mining. There's the assembly and the OEMs. There has to be coordination. And so also coming back perhaps to the broader definition of what we mean by industry, it's more than the miners. We have to think beyond this group and think of all the customers throughout that value chain. So now in terms of the standards themselves, I mentioned a few of the pieces of legislation. But the challenge is that these are being set externally, right? We've got the EU battery regulations, we have the OECD due diligence guidance for responsible mineral supply chains. There's the Responsible Minerals Initiative. So although South African companies across this value chain need to coordinate, the effort is focused outwards. And so South Africa also has to influence the shaping of standards. This collaboration will have to influence, but it also has to align with them and align the domestic practices and frameworks with those standards. And just to perhaps end on one point, that this collaboration across this value chain is bigger than South Africa. We are talking about a regional value chain. These batteries require a lot of minerals, which South Africa is well endowed with, but it doesn't have all the minerals. There is a need for this coordination to extend north of South Africa. And thank you.
Thank you, Martin. Minister, coming back to you, you've heard from industry, regional perspective, international perspective, and on the issues of policy and regulatory certainty. Can you just maybe in closing and summarize just what some of these issues are that occupy your mind as we move towards beneficiation of these critical minerals?
Policy certainty is one thing that we can be assured of in South Africa. We're amending the primary legislation of mining, the MPRDA. We are taking into account all the views. Sometimes when you deal with the industry, you have a sense that industry doesn't want to be regulated. And a free-for-all will be very dangerous to the sector itself. It must be regulated, but properly listen to what they say. And when you write your legislation, talk to their needs. So in South Africa, there's no problem of policy uncertainty. Actually, I have taken this policy to international forums. Actually, I don't understand what would be better than what we have when we compare to other jurisdictions. Take Australia, you take Canada, those are the top jurisdictions on mining. They compare well with us on policy.
Indeed, Minister, thank you very much for clarifying that. And the opportunities, I think that forums like the G20, but internationally, give us the space to see that we do lead and that policy in South Africa is clear, and that we are open for investments, and particularly that we would like more funding to come into exploration. I think that's very clear because that is the bedrock of mining. Ladies and gentlemen, please welcome me join me in thanking our panelists for this interesting session. Unfortunately, we have to wrap up now and move to the next session. Thank you very much. Thank you, Minister.
Thank you very much, Ms. Mahoshi Lekete. She is the CEO at the IDC, for those who do not know. And of course, your esteemed panelists. Thank you very much, ladies and gentlemen. Ladies and gents, we are now going to go to our final panel before we break for lunch. As they are getting their panel ready, I thought I'd take the opportunity to remind you what happens after lunch. So once lunch is done, and we'll announce all the various times, because as you've probably noticed by now, we've all lost our bearing on timing for the day. But what will be happening is that there will be various breakaway sessions happening on level 2. So the first one is on investment opportunity commissions. And in those ones, there will be 5 breakaway rooms. The one will be looking at South Africa on a new path, policy reform update and a new investment approach. Number 2, or rather the breakaway room number 2, will be agri-tech and food systems. Number 3, infrastructure, tourism and hospitality. Number 4, high-value manufacturing. And then number 5, institutional oversight role in monitoring investment attraction. So that will be the very first one that you'll be attending straight after lunch. It's all happening at level 2. Now, the important thing for you, of course, is for you to pick the one that you want. So that QR code that I told you about earlier, that's where you'll see the program. You will see that very first block of breakaway sessions. Take the time to pick the one you're going to be going to, so that as soon as you're done with lunch, it's very easy for you to kind of make your way there. So those will be the 5 breakaways that are happening directly after lunch. Then there'll be 2 other sessions of similar structured breakaways. Those you can find, of course, in your phone as you scanned the QR code earlier. Right, going now into our very final panel discussion that I'm told will be quite short because it's a relatively small panel indeed. Small panel in terms of number, but very high-powered. Sustained investment requires more than just capital. It requires the right financing architecture to mobilize, de-risk, and scale that capital effectively. This session now will focus on how South Africa is strengthening that architecture, including the specific role of the much talked about Sovereign Wealth Fund in unlocking long-term transformative investment. The people on this panel are absolutely right for this discussion. The moderator is the Deputy Minister of Trade, Industry and Competition, Mr. Zuko Kodlimpi, and his panel consists of Mr. Patrick Dlamini, the CEO of the PIC, Dr. Pindile Masangane, the Group Executive for Programs at the DBSA, and Mr. Ronald Lamola, the Minister of International Relations and Cooperation of South Africa. Mr. Zuko Kodlimpi, I hand over to you, sir.
Thank you very much, moderator, and good afternoon to everyone. Brapet, good afternoon, Ms. Pindi and Ozi. We don't have much time. I'm told that we only have 20 minutes for this conversation, so we have to try run through it and make sense of this thing. I'm going to start with you, Brapet, because you are running the PIC, which is South Africa's pension savings institution, as it were. And the discussion about a sovereign wealth fund is essentially about building another national savings portfolio that could also be utilized for driving growth. And the idea of this conversation is for us to talk about, does South Africa have a domestic capital market that could also complement the efforts of foreign direct investment that we're drawing into South Africa? Now, people can argue that South Africa would have to first answer the question, how are we going to finance the sovereign wealth fund? There are different possibilities. Usually countries use windfall earnings from commodity earnings. So we've seen the price of gold rallying, so we potentially could use that. Countries in the Middle East have used oil for that purpose. But a less explored possibility is countries using their own internal budget surpluses. If you can push yourselves sufficiently to have enough budget surpluses, you could reinvest and. But we also have DFIs in South Africa that have been playing that role of public sector capital that enters the market space to de-risk projects where the private sector could also come in. Now, I want to start with you. You run a pension industry scheme where workers save a portion of their income in order to realize into lifelong income over time, but it's also vital for deployment into projects that are public capital projects, but also private sector projects. In your view, what would South Africa have to get right from an institutional architecture point of view to start thinking about an optimal model of building a sovereign wealth fund?
Thank you very much, DM, and good afternoon, everyone, and a warm greeting to Minister Lamola and Mrs. Pindi next to me. I think it's an overdue issue for South Africa, if you ask me. But I think I was also quite happy to see in the G20 legacy, social legacy project, that this matter was looked into quite deeply. I think it is something that as South Africa we need to make sure that we drive it much more harder, to make sure that we realize it much more sooner, because we've been speaking about this as a country that is endowed in so many minerals, the PGMs, the manganese, the chromite. Really, it says we could be generating massive royalties that could be used as a seed capital for the sovereign wealth fund. And SOE dividends as well could also be directed into that space. I think it's quite commendable what we see in the National Treasury and Ministry of Finance, the robust and management of the national fiscus. We have a room there, but what will be critical success factors for the Sovereign Wealth Fund will be, I think, an enabling legislation by government to make sure that it is done in such a way that it lends credibility to the Sovereign Wealth Fund as an institution, and that there is also optimal governance levels as well, because people who will have to work with this institution will have to be the likes of ourselves as the PIC, the DFIs, the private sector, because it will really be coming in to augment us as the long-term capital deployer, as well as the player in the equity space, which also at this point in time PIC will do with a number of partners. I think they could also come into the JSE much more stronger. But we look after the pensioners' money, which they need during their twilight years. Yeah. And how do we make sure that during their twilight years, they also live comfortably, that there is infrastructure, that their basic needs are met. So these investments are important both from the return points of view, and they're also important to make sure that we invest in the areas that will also contribute to the comfort of the retirees.
Thanks, Private. Now, Dr. Pindi, just to build on the point that the CEO is making, you work in the DFI space. You do a lot of project financing and de-risking, early-stage de-risking for private sector capital to come in. Two things. Brapet is running pensioners' money. So because it's a described benefit institution, he must be careful. So his risk appetite must be regulated, yes, because we want our money at the end of the day when we retire. You run a DFI. A lot of what you do is also constrained by the size of your balance sheet. Now, I want you to make us understand, what are the gaps in the work that you do that you believe a potential sovereign wealth fund could help you to bridge, to optimize on the work that you do in rolling out infrastructure expenditure, both in South Africa and in the Southern African region?
Thank you, DM. Good afternoon, everyone. Afternoon, Honorable Minister. So as a DFI, we have allocated a significant amount of capital to early project preparation, because some of the reasons, and it was mentioned earlier on, one of the reasons why as South Africa our infrastructure projects are not moving forward is because they are not properly developed, they are not bankable. So what we do as the DBSA, we have the capability and we have mastered the art of developing the project to a place where they are bankable, where they are financeable, where it becomes easier for the financiers like the PIC who've got a lower risk appetite to then come in and finance, because the risk allocation in the building and maintenance of that infrastructure is well defined. So that's our role as the DBSA, to make sure that the project is properly structured and it's clear where the returns are going to come from. It's not just about building the project, the infrastructure, it's also about maintaining it. I think for me, earlier on, when the president was putting up the ambitious infrastructure build program that we need as a country to cement our growth and to make sure that our economy grows, two things came to my mind. One is that we cannot leave this to foreign capital. We've got to mobilize our own domestic capital. We've got to be captains of our own destiny. But most importantly, we've got to make sure when we use our own money, what it does is that it protects our sovereignty. So this issue of making sure that we revisit the creation of the Sovereign Wealth Fund is core and is at the front and center for our board. And therefore we will be collaborating with the different institutions to say, what role do we play? Patrick has discussed some of the critical success factors. But even as we do so, we will, as the DBSA, play our role in terms of preparing the projects, supporting this infrastructure build as we prepare and look at how we can structure the Sovereign Wealth Fund.
Thank you very much. And I do think we have a test case in the PIC and the DBSA on the governance and credibility guardrails that we can build. I want to bring in the Minister of International Relations. The Gulf countries, very central to their foreign policy is the work that is done by their sovereign wealth funds. So the partnerships that they initiate across the world and how they've pushed themselves to be where they are globally as strategic political players has been at the back of this. South Africa identifies itself as a champion of the African cause. And part of what it has to answer is, if it champions the African cause, does it have the capacity to guarantee that by assisting African countries in developing their economies? Now, I want you to give us your experience of the global setting on how sovereign wealth funds are instruments of foreign policy just as much as they are instruments of domestic development.
Yeah, no, thank you very much. Indeed, they are very important levers to add to the domestic markets or capabilities that we already have from our own domestic finance institutions into the African continent. And as you have already said, in the Gulf countries, that's what they have used to invest even in our own continent and also in many parts of the world. And most of them are driving what we have now, the artificial intelligence, even at Silicon Valley. So South Africa, as the most industrialized country in the continent, has a duty and a responsibility to drive, to lead, and to champion what she has already said, our own domestic capital that must enable us to protect our own sovereignty. And that is why you will have still today, when we speak from the G20 about critical minerals, the issue of value addition, local beneficiation, artificial intelligence, local research, and also development. But when you look at the corridors we still have in the continent that we are building, because of the external capital, they are still built for extraction. So we need to come up with our own capability that must reverse this and enable, when we speak about the Lobido corridor, we must be able to demonstrate and be able to do it in a manner that it becomes an economic corridor for the whole region, including in the Tanzania corridor. It must be that work of an economic corridor. Obviously, we know that at some stage, while there has been even a minimum kind of beneficiation, they will still go, but it can't be the main objective of the infrastructure that we're building, that it is still for the colonial era. So our building of our own sovereign fund will help us in terms of that prioritization, also to link with the regional bodies like SADC. What are the infrastructure projects that have got a regional impact that will enhance these economic corridors, domestic and including value addition in the region? The INGA project, in the DRC, huge, with catalytic regional impact for the whole continent, which can give the whole continent electricity, give us enough electricity. But in terms of that financing, you will know the challenges that we ended up with the INGA project. But this is a good platform to enable us to revisit that issue and go back to the INGA projects in the GRC, the one-stop border posts that we are building, which are supposed to contribute to the non-trade barriers that we need to build in terms of the linkages in the region. All those could have that good platform, working with all the domestic DFIs and so forth, to enable them to achieve the regional objective goals of SADC in terms of regional integration. As we speak, we are the most organized region in terms of politics. We are friends, all of us at SADC. But our trade is at 21%. So the friendship does not show in terms of the number of trade. So this can help us to accelerate these issues related to infrastructure. The Cape to Cairo road goal and objective. All this needs our own financing capabilities to drive, to enable us to achieve these goals. So we think it's an important accelerator that needs to be enhanced.
Okay. Prapet, I'm going to throw you a curveball. One of the criticisms that the PIC gets is that a lot of our capital is deployed in sectors of the economy that we don't view as industrial drivers, that we are overly exposed in retail and what would we have to do in the design of the Sovereign Wealth Fund to get a particular exposure that helps to sustain investment in the industrial sectors such as manufacturing and. I think if in the legislation you carve it in such a way that you direct it to the infrastructure play, which is a long-term play, yes, I admit and I agree, much of our domestic capital is stuck in the fixed income. It's stuck in the short-term deposits. But again, I think if you ask me, it's more a function of the investors, the owners of this capital, seeing opportunities and seeing well-prepared and well-planned projects coming into the fore. I think what we're now seeing in South Africa, the green shoots that actually are beginning to observe in the country are auguring quite well. I think you will see what's going to happen. To the profile of the PIC even well. before the Sovereign Wealth Fund comes into being, ourselves, the DFIs, the many other asset managers and international players, we really want to come to the party, but we want to hold government as a super actor to lead us properly and to enable us properly, because commercial banks are also quite important for us to play in the infrastructure and the economic growth triggers, because infrastructure is quite key in the growth of the economy. That's what we want to do. Okay. Sispin, what do you want us to do to help improve your performance as well? Use the Sovereign Wealth Fund to help you improve your performance. What would you give us as a policy guidance that we must get right in designing the Sovereign Wealth Fund?
So as we do this investigation on how we can make this concept of the sovereign fund a reality, one of the key considerations is the legal framework around it and to make sure that the institution is set up for success. But just going back to what Patrick was talking about in terms of the fact that once the projects are properly prepared, even before the Sovereign Wealth Fund comes in, there's going to be a lot of crowding in of the available domestic capital. Just to give you an example, what the DBSA is now currently doing, instead of developing this project by project basis, we are now doing it at a program level to say this is what private sector participation would look like in power generation, in the rail and the logistics sector. And we believe that once the projects are properly prepared, you'll already start to see the mobilization of the available domestic capital. But the Sovereign Wealth Fund, the creation of it, is critical to then scale up and to make sure that we achieve the ambitions that the President set out this morning. Thanks.
Thank you very much. Ozzy, you cried for beneficiation since 2011. Now you have an opportunity to make it happen. What are the strategic beneficiation partnerships that you would suggest the Sovereign Wealth Fund must lead in the region first and in the African continent broadly?
Yeah, thank you. Firstly, is that we have to work with the private sector to make it practically possible. Because at the SADC level, there's already a clear policy in terms of the critical minerals, in terms of value addition, beneficiation, including the issues that impact on the infrastructure to enable it. At the African Union level, we also have a resolution on critical minerals, beneficiation in the continent, the G20 resolution. But the resolutions won't implement themselves. And government can only make the policy practical. And I think this investment conference becomes key to then look into all the projects that will enable the beneficiation and implement these protocols that we have adopted at SADC, at the African Union, including at the G20 level.
Okay, we are going to end it there because we've run out of time, but we got some key insights about the importance of getting the legislation right and doing the institutional partnerships properly, but including having a very clear project program pipeline, not just a project pipeline, but at a programmatic level, and to get government's leadership role in leading the path that the private sector we want to follow. We got those insights right. And I think the important point that the minister was raising, the centrality of using these capital instruments to translate resolutions and protocols into living and breathing African Renaissance projects. So thank you very much for your time, and I hope our conversation was useful to the audience as well. Thank you.
Thank you.
And thank you very much to you, Deputy Minister of Trade, Industry and Competition. And thank you for demonstrating to us different avenues for funding development on the African continent and moving forward. All right, so we're the only two people standing between you and your lunch, and we don't want to do that. But what we'd like to do at this juncture is just tell you what transpires after lunch. So we will be taking the conversations further after lunch, focusing on sector-specific opportunities in the form of 5 investment opportunity commissions that will be taking place after lunch. And these will be starting at 14:45 up until 3:30. So I recognize you'd say, oh, that gives us just 45 minutes for lunch. We're hoping to make up time. So at 14:45 to 15:30 is where we commence the afternoon agenda with 5 investment commissions. The second round will be parallel commissions. They'll start promptly at 15:30, so at 3:30 until 4:15. And there we're going to look beyond South Africa and start showcasing regional economic opportunities and discuss economic diplomacy, something that's just been alluded to by the Honorable Minister of International Relations. And then the final round will kick off at 4:15, running until 5 p.m. And here we're going to have supercharged TED Talk type series, blending conversations around innovation, inclusion, and of course, national development priorities. So just to reiterate, 14:45 to 15:30, the first of 5 investment opportunity commissions. Second round, 15:30 to 16:15, we look beyond South Africa and regional opportunities and really unpack this idea of economic diplomacy. And then the final round will be from 4:15, running until 5 o'clock. TED Talks, really looking at innovation, inclusion, and national development priorities.
To reiterate then, all of this is happening on the second floor. Those would be your sessions, all right? You can also scan the QR code, if the team could put up the QR code one more time, in case you're lost and you don't know where to go, which one to pick. All the detail is there in the times that Lerato has shared, so please do so. Now, we will then see you in the ballroom on the same level, level 2, at 5:30 for now the conclusion of our day, which will be the investment announcement